This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil with Invest Like a Pro. I'm going to talk about the S&P and the QQQ. I also want to show a method that I use periodically when I really want to get a little bit more clarity. And I definitely recommend someone who is new to using multiple time frames to use this method. You need a software that allows you to look at more than one time frame at a time. I prefer to see 3 different time frames at once. Really, I prefer 4, but at a minimum, I want to see 3. And you could do it with 2, but I don't think it has quite the same effect. But I'm going to show you that first, and then we're going to get into the analysis of what's taking place in the overall market. So let's just start with the 4 charts. And what I've done is I'm showing the QQQ here. I wanted to use this index because I think it shows a little more about what I'm trying to drive home here. So what I've done is I've still got the monthly, the weekly, daily, and hourly charts up, but I've taken everything off but price, volume, and a simple 18 MA. Now, anyone who's watched my prior videos knows I like to use an 18 and a 40 together as a buddy system. And I'm not recommending that you eliminate the 40. I still think the 40 is a valuable tool. With that said, every now and again, I think you should clear off your screen and take everything off except just price and this simple moving average, this 18. The 18 is really the driver behind this approach that I use. And if you just look at this one single moving average and you look at how the price action is relating to this one simple moving average, as well as the slope of the moving average in each time frame, you have a very, very good idea of what's taking place. So for the monthly chart, we have a rising 18. And every pullback has been respected. Yes, it overran a little bit, but not to the degree where it got disconnected at all, and not to the degree where it caused the moving average to flatten out or roll over. So you have to consider this to be in an uptrend. The negative that I see in this situation is that it's still pretty far away. There's a pretty decent amount of separation in the QQQ from its 18-month moving average. And obviously, the lower risk entries are where you're at or near or maybe just below a rising 18-month instead of being stretched away. If we go and look at what's taken place on the weekly, notice how it has been respecting this line. So you have a rising 18, and on the pullbacks, you're getting really good support from it, really good reactions. The market is moving up higher. We're making higher bottoms because you have a rising moving average that's being respected. So this is a good trend in this environment. This is a good trend. It's not overbought. Overall, it looks fine unless we start to see a break of the 18-week where you come down and it doesn't hold at that on a pullback and starts to violate it. This time frame, the intermediate term time frame, I would consider to be bullish. If we go and look at the daily, this is really driving home the whole point. If we go back to the beginning of this chart, you can see every pullback had a rising moving average, and every pullback was being respected. The 18 was being respected on each pullback and causing a new high to be made. And that is really what you're trying to identify. If you're looking for stocks to trade, go identify the stocks where you have a nice solid uptrend of higher highs and higher lows that never goes crazy and it pulls back and holds the 18. Find those on a pullback and then go down to the hourly and look for an entry. That is really a great starting point. And then notice what happened. It got a little stretched away, a little crazy away. And then when it came down, it broke the line. And look at what's happened since that time. The line is now just kind of waving back and forth sideways, and price just is not respecting it. Every time it came down through here, just broke right through, rallied up, broke right through, came back down, broke right through, rallied up, broke right through. Now, for the first time, we got a little bit of a pullback. It's trying to hold.
To me, that will be the first sign. If this can hold 282 and turn up from here, it'll be the first time in this sideways pattern that you're proving that this time frame is starting to turn. So just looking at this time frame, I can say it's neutral until we get a little bit more respect here. It looks like it's trying to hold, but it's not convincing yet. If we were to come down and break down through, then I would consider this still to be in a range. But if over the next few days you hold this and turn up, then the odds are improving that this time frame is actually turning back into an uptrend again. So this is a great way, I think, by taking off everything, you can see really what's taking place in each time frame. And then if we go and we look at what's taking place on the hourly, you can see lower highs and lower lows and kept failing at the 18. And then you turned up and made a really strong move. And, and then you broke down below and now you're breaking back above. The question is, can it hold here? And if it holds here on this time frame and turns up, then we're probably getting a little bit more confirmation that the daily time frame is holding as well. So I think this is a great exercise. Go through and look at some stocks this way. If you can pull up 4 time frames at the same time, I think you'll find you'll get a really good feel for what's taking place and how to use these time frames together. I do want to switch and make sure we look at the indicators real quick before I switch over to the S&P. One of the glaring things, so the only thing that really stands out, nothing other than what I have already analyzed just using the 18, stretched away on the monthly chart. The weekly chart has been consolidating. And we've gotten the MACD below the signal line. I mentioned that a few weeks back. And it's really just been in this consolidation pattern. It's probably going to continue for now. One of the things I did want to focus in real quick was the daily chart. And if you notice, what's taken place is DI line is moving up, and then when it pulls back, it's not holding. And then red takes over, and when it pulls back, it's not holding. And what we need is the first time through this period, through this sideways period for price, we need one of the DI lines to hold. We need it to kind of prove that it's rallied up, takes out the high of the opposing DI, and then holds on a pullback. And if we have that, we have a lot of confirmation from the ADX indicator that the trend is starting to move again. And so that's one thing that we really we don't have yet. But what I will say is we've pulled back to the 18 and the 40 zone. And if we go to the hourly chart, we're forming this pattern, the pattern that I have talked about over and over and over again, where the 18 is now below the 40. This is the opposing trend pattern. And we're trying to hold this. If we can come back up through this moving average, then you're making a higher bottom and then you can make a higher high. And that would be kind of convincing evidence to me that this time frame is turning up. And if it can do that while it's holding this support on the 18 and the 40 on the daily time frame, then I would be more convinced that we're getting ready to make an assault on 300. If in fact we don't, and this thing breaks back down through these 2 moving averages again, we're still in the same mode where 260 is support and 300 is resistance. Let's switch back to the 4 time frames and let's go take a look at the S&P. So the only glaring thing that's different in these time frames, one thing that I will say, when I look at the monthly chart, you don't have the same kind of relative ADX strength on the S&P, and most of that is due to this big spike to the downside. It just takes a while. If you realize I'm using a 13 MA for the DI lines, so we have to go through a full year of DI line months before this DI line is really going to be able to catch up after this big spike to the downside. So you need to understand how these are calculated so you understand why there's so much lag to this indicator. So don't get too worried about the fact that we're not getting confirmation on this time frame. I just want to make sure I pointed that out. If we go to the weekly chart, again, pretty good respect at the 18, both pullbacks, and tried to break out. And now we're coming into this zone here. 3,500 was kind of the breakout zone I had talked about. Really want to see that hold, but you don't really break down unless you come back down through 3,400. And that's shown a lot more clearly by the 18 and the 40 on the daily chart. You can see the 3430 is the 18 and the 40 is right around this 3,400 area. So if you were to break back down below 3,400, really be confirming that this was a failed new high and that we're still in a sideways trading range. So what I'm looking for, and I want to go back to the 4 time frames because I just want to show. So on this time frame, we've made a pretty good move to the upside and we've pulled back. It actually looks a lot better than the QQQ does. It had a stronger, more powerful move, and the pullback isn't as violent. You don't have a big reversal bar like you do on the QQQ. It's just kind of hesitating here and pulling back so far. What's taken place on the hourly is we're getting really close to the 18 crossing down below the 40 with low ADX, meaning there's not a lot of strength in the ADX to the downside, and the MACD line is coming down towards 0. So this is setting up the same pattern that we look for, where if the 18 crosses down below the 40, we have the opposing trend developed, and then we'd look for a cross of both moving averages to the upside. I'd prefer to actually see this dip down a little bit more, get a little bit closer to these moving averages, but really 3,500 is support. And if we get this to play out this way, I think this is a pretty good setup for a new move to the upside, or a continuation to the upside, I should say. So that's really where we want to be on these time frames, looking at all these time frames. And I hope by doing this and going back through, you should go back through my old videos on the S&P. I do them once a week. You should by now, if you've watched 4, 5, 6, or 7 in a row, have a pretty good ability to be your own analyst. You should be able to look at all these time frames and have a pretty strong sensation, strong feeling, a strong belief as to what's taking place and where good support, where good resistance is, based on this moving average complex in each time frame. So anyway, if you're interested in seeing more of this type of analysis, please hit the subscribe button and hit that like button as well, and we'll talk to you soon.